There's full underwriting, which basically once you put in the application, you have to set up a paramed examiner to meet with the client. Usually this is where they ask the client additional questions, they collect urine, blood, they do a blood pressure check, and then they submit that information to the carrier's underwriting team to review that, as well as they'll wait for like lab results. And then based on that and the way how you um, filled out the application with the client with their health questions, underwriter will make a decision at that point. Sometimes depending like what the client's pre-existing condition may be, if they need more information before they make a decision, they may request medical records to be released, which then the client has to sign off on it. And then they reach the client's doctor's office so that, you know, the doctor will send the records over to the insurance carrier underwriting team, or they may need a physician statement to, if they have like certain questions to verify certain things before they make a decision. That's full underwriting. This product here is simplified issue, meaning basically once we put in the application, it's going to ask for a HIPAA. Is it all life insurance? They all ask for a HIPAA requirement, or basically HIPAA authorization. Once we go through the application, it's going to prompt the client to e-sign for a HIPAA authorization. Basically, what they're going to do is based on the client's social security number and you know, filling out the app, they look at the medical information bureau, and basically it's kind of like a history of prescriptions that will pop up. And based on those prescriptions, the underwriter can make a decision. Okay, yeah, we can. There's a good chance we'll prove this, or if they see something like, say, there's a prescription recently that battles cancer, then they know, okay, it's a knock-on, meaning it's automatic decline. So that's simplified issue. You'll see a lot of simplified issues, especially in the final expense world. Basically, final expense is just a marketing term. It means whole life, but it's dedicated to the senior market, because usually most seniors do have some sort of health conditions or some sort of pre-existing condition. So their underwriting's a little bit relaxed and they only require limited information to make a decision. However, compared to full underwriting, those premiums are going to be a little more expensive if, let's say, that applicant went through full underwriting. So final expense really means whole life, and usually it's within the age, depending on the carrier, it's usually the age range is from 50 to approximately 80. Again, depends on the carrier. This here is for anyone to be eligible for this particular product, you must have to be at least 18 years or older. Anyone that's a minor cannot get this specific product because it's a simplified issue. And although you can offer index universal life products to minors, however, it has to go through the full underwriting version of that. But they don't send a paramed exam. They'll just go based off the MIB. So in a way, it feels like it is really a simplified issue, but you cannot sell a simplified product to a minor. Right. So here we're going based on clients 30 years old, $50,000 death benefit. Here's the strategy here. There's other strategies here. You could do one with the cap, 100%. Personally, with this, I do the participation rate. Participation rate is 86%. So this is good in the sense that, you know, we're not capping the client at a certain level. So if, let's say this year S&P 500 really takes off, the client has an opportunity to make a significant amount of gains. You can decide if you want to do 50-50 on the cash value on this. That's fine, as long as it totals up to 100. I personally just do 100% participation rate on the 100% participation rate. Okay. So here is just the automatic calculation for you. So basically, someone that's 30 years old, $50,000 death benefit. The total premium is going to be $18.66 a month. Okay. All right. So we're going to set up Jane Doe in a minute. And here you can create a report or start an e-app. We're going to go ahead and start an e-app. Okay. I think it's SB 1995 to be exactly 30. Okay, we're doing Florida. Okay, this is going to be remote. Okay, I'm glad that Americo finally put this up. In the past, I've lost business with this company because nowadays you have a lot of folks, they don't use the traditional banking like Chase, Bank of America, banks like those. They use Chime, MetaBank, Cash App. So when you have a conversation with your client, you want to make sure, if you're going to sell Americo, they don't do debits or credit cards. It has to be banking. And the banking has to be the old school banking, not the online banking. They will not accept it. So if you put yes here, it's going to say Americo does not accept any bank accounts associated to peer-to-peer mobile payment. And they give you examples, Venmo, Zelle, Cash App, Mhm. Put single here. 20.